Hi, this is Zak Mir with the US penny stock highlights on Wednesday, the 22nd of July. Starting off with CleanSpark, where we've hit our intermediate target, which was our final target at that stage, but shares up to $5.50 on a spike today after breaking that line of resistance from May and gapping through it around the $3.20 level. The view at this stage is that at least while we're above the 200-day moving average at $3.70, the upside remains. Ideally, we remain above post-April neckline resistance around $4.50. So for near-term traders, above $4.50 up to $5.50. End of day close above that. And we got the chance of a top of 2020 price channel target as high as $8 over the following 4 to 6 weeks. Next up, a stock which is understandably feeling the benefit of rising precious metals prices. Incredible chart here with at least two gaps in a row, or three gaps in the recent past. Situation here is that we looked at this stock before, hoping that it would be able to sustain a move through that August 2019 resistance around $3.20. We even easily achieved that and hit the resistance line projection from 2017 up to $3.80. End of day close above $3.80 could give us a best case scenario target now as high as $5, which is the October resistance line projection from late 2017. So at this stage, only really back below $3.20, really endangering the bull argument, and above $3.80 we should head up towards $5. Genprex is next, and here you can see that shares have been pretty impressive in terms of the triangle breakout, which is, I suppose, arguably the most reliable and the easiest to get a handle on in terms of charting and near-term price action, especially on the upside, obviously. Here we've had a break of the February triangle via a gap to the upside, holding above also the old late June resistance at $3.80, and end of day close above $3.80 could take these shares up towards the target at the top of the trend channel from February up to $8 over the next 4 to 6 weeks. So looking like a pretty punchy situation on Genprex over the near term. Stock which hasn't been quite so punchy, at least on the fundamental side, is Hertz Global, where I think the last thing most of us can remember is that the car rental company was filing for bankruptcy. But at least in the near term, the shares have stabilized at and above the resistance line there from June at $1.54. And while there's no end-of-day close back above that, we could be in a near-term recovery mode, heading towards the best-case scenario target at the top of a rising May trend channel at $2.90 plus. At this stage, if you are a fan of the stock, looking at a Robin Hood trader, so to speak, only back below $1.40 in that May uptrend line would really upset the idea of a potential spike in the shares. Chart of the day, I would say, by a reasonable margin, is Horizon Global. That's set on the basis of the quite stunning and sharp break of near-term line of resistance for the shares. They already broke the 200-day moving average, the orange line there at 290 at the beginning of the month, but breaking that line of resistance from November at $3.55 is impressive. And while we hold above that November line, looking for a target as high as $8 plus, which would be the top of that rising trend channel from September that I've drawn, and it could be hit as soon as the end of August or maybe into early September. Stock which I covered a few days ago and which I remember largely because it's got a strange name, is Oblong, if I can get the right ticker code there, Oblong there. Amazing gap higher for today's session, and also one that's at least temporarily causes shares to hit the near-term trend channel target at $3.95. The key now is whether, for the bulls at least, is whether the shares can hold above $2.70, which was the former March peak. If they can do that on an end-of-day close basis, we could not only get a retest of the $3.90 area, but actually accelerate to the upside and potentially hit the line of resistance that I've drawn there from from December last year, currently heading towards $5.50. So a lot on the stock in terms of holding the $2.70 area and then bouncing off former resistance as new support. Just a couple of shares to go now. The first is Viewray, where we followed this stock before, and it seems to be behaving itself to date. That's said on the basis of the setup that we have here with the move along the floor of this rising trend channel from January. All that we're looking for here now really is an end of day close above that February resistance line at $2.50. If we can get that, then the near-term outlook for the shares could be as high as $4.40 plus over the following 4 to 6 weeks after any break of the $2.50 area. Obviously, some resistance there around $2.70 in the 200-day line, but it looks as though the key feature here is that line of resistance from earlier in the year. Finishing off with another strong situation, Waitr Holdings. Reason for saying that is that we had the gap higher there at the beginning of May, which remains unfilled, and another one for the beginning of July, which also remains unfilled. So that's two unfilled gaps to the upside. Pretty impressive, pretty strong momentum. View at this stage is that while we're above the June support line there at $4.10, we could head up as high as that March resistance line projection, currently heading up to $8 on a 1 to 2 months time frame. And the best scenario would be that we remain above that old early March peak around $4.40 ahead of any move to the upside. So if we remain above that on an end of day close, that would inspire confidence that the move to $8 is on its way relatively quickly. That's it from me today. More updates tomorrow.